In this module, we will learn the accounting entries that we have to pass for all adjusting items. Yes, we have practiced few of those in the earlier module, but here you will see accounting entries for all the possible adjusting items. Remember, let me recall you once again that we pass accounting entries only for those items for which adjusted cash book is prepared, because these were not recorded in our accounting system. So if we are putting this in our accounting system, means in the cash book, these should be recorded through accounting entries. And as far as the items that we put in bank reconciliation statement, so the bank reconciliation statement is just a working to keep ourselves satisfied that, okay, if this will happen, our adjusted cash book balance will be equal to the balance as per bank statement. So for bank reconciliation statement items, we don't need to pass accounting entries. By the way, what we show in the bank reconciliation statement, we show uncollected checks and unpresented checks. These are the checks that we have already recorded correctly in our cash book. This is the bank which has not yet recorded these unpresented and uncollected checks in its own record. So why we should reverse these two accounting phenomena in our books of accounts? That's why for uncollected check and unpresented check, we do not pass any accounting entry. Rather, as a memorandum, we place these two in the bank reconciliation statement. And in the same way, in the bank reconciliation statement, we show the mistakes committed by the bank. These are not the mistakes by the accountant of the business. So these mistakes should not be taken as an accounting entry in the books of accounts of the business. By the way, these are the mistakes for which the bank accountant will make amendments in the books of the bank. Always remember who we are, who you are. You are accountant of the business entity which is maintaining a bank account with a bank. So we are concerned with our own books. We are not concerned with the books of the banker in which our account is maintained. The banker is just providing us a bank statement which is showing us debits and credits relating to our transactions and a final balance. So the accounting entries that we will be passing in our books of account include credit transfer. Credit transfer means that someone has transferred a credit in our bank for which the banker did not pass this information to us timely. When we will get to know that this credit has been transferred directly into our bank, then we must record this accounting phenomena in our books of account. So how we will record? Since because of this credit transfer, there is increase in bank balance, the bank account will be debited. And the reason against that credit transfer, that can be either our income or that we have received from a debtor or receivable, will be credited. Direct debit. Direct debit is the bank has made payment directly on our behalf to any vendor or to a supplier or for some reason which is valid. But the banker did not inform us on the time, or the information was in transit before the date of the bank reconciliation. This transaction had already happened. So when we will get to know about direct debit, we have to credit bank account in order to record decrease in the bank, and will debit that reason that can be an expense or creditor or payable. Then standing order payment. Standing order payment means that we have given a standing instruction to the bank that on our behalf make this payment at regular interval. For example, you have to pay a subscription at the end of each month. So you will give a standing instruction to the bank that this fixed amount, the bank will make payment on your behalf on that date. So after each interval, the bank will be making payment on your behalf based on that standing order or standing instruction. So for this, the bank balance will be decreased. You will credit the bank account and the reason will be debited, either the expense or the credit or whatsoever. Then bank charges. Yes, these are your expenses and causing a reduction, a decrease in your bank balance. So bank account will be credited and bank charges will be debited. Interest charges, in the same way, interest expense will be debited and bank account will be credited. So when we will credit the bank account, it will cause a reduction in our bank balance. So next is deposited check returned dishonored. You deposited the check, but that has been returned dishonored. Means when you deposited the check, the bank account was debited. Okay, that increase in bank balance you recorded, but because of some reason, that can be any reason, the check has been returned. Since the check has been returned, now you have to pass a reversal accounting entry. So the bank account will now be credited and the person from whom you received the check, obviously that person was your debtor. Now you will debit that debtor once again. Remember, when you receive check from debtor, you debit bank account and credit the debtor, assuming that this much amount has been received from the debtor. But what should happen when it is revealed to you that the check is bounced, has been returned dishonored? So you have to reverse this accounting entry, credit bank account and debit the same debtor account. Then comes some mistakes that you have to rectify in your cash book, because that was at your part. You made this mistake. You committed this mistake. So it is you who has to make rectification in your own cash book. And this is receipt side, mistakenly overstated. Receipt side is the debit side of the cash book bank column. So if it has been wrongly overstated, now you will give credit to the bank and debit to the suspense account. Why? Because there is only single effect which is making this error correct. Remember, when by giving only single effect, your error is rectified, your mistake is rectified, then the second effect goes to the suspense account. We will discuss this suspense account in another module in deep detail. So as of now, suspense account. Okay, so there was a mistake in the bank column only. That's why we have to rectify this bank by giving second effect to the suspense account. So receipt side mistakenly understated. So by any reason, receipt side is understated. Now you have to debit. Receipt is debit in the bank column, in the bank account or cash book. Debit side is the receipt side. So if it is understated, you will give more debit effect in that with a credit to suspense account. And payment side mistakenly overstated, payment credit side overstated. Now you will make debit to the bank and credit suspense account. And payment side mistakenly understated. Payment understated means you will credit bank account and debit the suspense account. So one thing more, that there can be a reason of issued check returned dishonored. As we discussed, deposited checks dishonored were returned. In the same way, issued check can also be returned. Means you have issued check, because of any reason that is returned to you back. So what you will do, you will write another check. So for this thing, you will not record any accounting entry in your cash book for reissuing a check against the dishonored check which was returned back to you. So the important tip to remember in this module, practice. Again, practice. Once again, practice. And this will make you perfect, inshallah. Thank you.